Happy Wednesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, February 7th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So we'll start with today's key macro event, which is the U.S. Treasury and Beijing are likely to continue pursuing investor-friendly policies over the medium term. The nuance there is that in her testimony to the House Financial Services Committee, Treasury Secretary Janet Yellen remarked, I believe the problems facing the commercial real estate sector, paraphrasing that, are manageable, although there may be some institutions that are quite stressed by this problem. She confirmed that U.S. regulators are working to ensure loan loss reserves are adequate. Elsewhere, Wu Qing, a banking veteran, will replace Yi Human as the head of China's Securities Regulatory Commission. From a market implication standpoint, the Treasury's willingness to work with affected lenders represents an upside risk to U.S. liquidity and, by extension, asset prices. The positive fiscal impulse represents an upside risk to growth and inflation. For now, that is helping inflate the probability of the soft landing at the expense of the hard landing scenario. In 1 to 2 quarters, we believe it will help inflate the probability of a no landing at the expense of the soft landing scenario currently underpinning the Goldilocks market regime. Lastly, we believe the CSRC shakeup. We see the CSRC shakeup as an incremental sign of Xi's desperation to fix China's broken stock market. Investors should expect more positive global liquidity flows from the Chinese liquidity impulse over the medium term. Transitioning to my 42 macro dashboard here. As always, we'll wrap up with a question from our community here. Just getting a question just from a subscriber asking, would lithium miners fall under the industrial commodities bucket? And I assume this is with respect to our discretionary investment ideas summary that we use to help investors use to either create customized versions of our KISS portfolio construction process that are more suited to their own specific investment needs, or they use it as an risk management overlay to their discretionary trading process. So clearly here, the subscriber has a discretionary trading process that has led them to either wanting to be long or short lithium miners. My guess is probably long, just given the long-term fundamental story there. And so using our discretionary investment process, they can use XLB as a material sector, which is where those stocks would fall under, use that signal as a risk management overlay to guide their positioning and their timing in terms of being long or short that particular exposure. That's what that tool within our 42 macro research does. It helps investors, who are using it as a risk management overlay, helps them understand position sizing, helps them understand timing, and ultimately, what you're trying to do is when it's a bull market, when there's money to be made, you want to be making the money. When there's not money to be made, you want to be out on the sidelines, and that's kind of what that tool does across all the various factors across global macro, thinking equity sectors, equity factors, global equities, fixed income sectors, and different macro asset classes, with the currencies, commodities, crypto. So definitely check that out if you have not reviewed that. So we'll wrap it up there. Darius Dale presenting our macro minute for Wednesday, February 7th, 2024. Everyone have a wonderful day out there. Best of luck, and we'll catch you back here tomorrow. Cheers.